Markets sharply rallied Tuesday on optimism for de-escalation of the tariff trade war with China. So what happened? Well, the Treasury Secretary hinted at China tariff progress. He noted the tariffs were unsustainable for both countries and expects de-escalation. Later, the press secretary added the White House was looking to negotiate a deal with China. After the recent crash following Fed Chair Powell's warning last week, markets jumped on the first sign of positive tariff news. Markets popped 2.5%, fully recovering and more from Monday's drop. Then, aftermarket, more positive news was announced. First, the White House said it was not planning to attempt to fire Powell before his term's up next year. Powell had warned U.S. tariff policy would likely slow growth and increase inflation, which led the White House to threaten his removal. Markets very negatively reacted to the prospect of removing Powell for political reasons, with the US dollar continuing to weaken. Second, the White House also expects China's 145% tariffs to come down substantially. While trade deals are supposedly being worked out with other countries, the White House's laser-focused trade war with China was still the elephant in the room. This announcement backs up the comments made earlier in the day that negotiations with China may start. After a week with almost daily retaliation announcements, this is another positive step towards macro stability. And finally, more on the domestic front. Elon Musk confirmed on Tesla's earnings call that he'll be shifting from his government work in May. Market optimism was likely also bolstered, hoping for the prospect of less federal restructuring going forward as well. Again, the market doesn't generally do well with uncertainty that it was causing. So, market futures are currently solidly green, hopefully signaling another green day Wednesday, but obviously not guaranteed. While we're cautiously optimistic for trade deal progress, both the US and China's tariffs are still in place. So we still see near-term pain for companies without the ability to plan and still expect more conservative outlooks this earnings season. However, the shift in the news cycle tone may stabilize and even lift consumer sentiment, bolstering consumer spending plans. Overall, recession odds are still high with forecasts around 50-50 right now. As always, we're monitoring for new developments where that could change.